Good evening, everyone. Welcome back to my channel. I have some good content. I'm going to bring back the series, how to make blank dollars in dividend income per month. And in today's video I'm going to show you guys how to make $500 per month in dividend income, which comes out to $6,000 per year. I have other videos that I've formulated with different stocks to make $250 per month, $200, $150. So today's video is going to be interesting for you guys learning how to make $500 per month in dividend income. And the stocks that I'm going to that I picked to use is the Nusi the nationwide Nasdaq 100 Risk Management Income ETF, JEPI, the JP Morgan ETF. Also going to compare the JEPI to the JP Morgan stock, compare it for individuals who are a little bit risk averse and was also wants a dividend stock to invest into for dividend income. And lastly is going to be BOA, or also known as Bank of America, ticket symbol BAC. So for me, I have a business account and it has BOA on my particular credit card, but also if you want to actually buy the stock BAC, Bank of America, you can do that. In these different examples of, like, for example, with Nusi and JP Morgan ETF, income ETF, you're going to see that the dividend income is a lot higher compared to Bank of America. But then we're going to weigh out the pros and cons into why to even invest into a Bank of America with a low yield. So if you are interested to learn how to leverage the stock market to make money, dividend income, creating different portfolio, make sure you like and subscribe to my channel. Make sure you watch my content from beginning to end, because I'm delivering delicious, wonderful content that probably other content creators are not pretty talk to you about. And I'm delivering stocks, the ETFs, and whatnot of the normal everyday investor probably haven't heard of. Now, if you're in the investing community, you probably have heard of Nusi, Jepi, and also Bank of America. But a lot of times, a lot of people are not familiar. So let's dive into the content. So here, starting out, we have Nusi. So what is Nusi? In the investing community, there's many different income ETFs that dividend investors are familiar with, such as Nusi, Jepi, QYLD, XYLD, and there's also Devo. So typically, a lot of times, I know a lot of times people uh, invest into Nusi when the stock market is down like this, and they want some type of protection against like a down market, so that something that doesn't particularly go down as much. So Nusi stands for the nationwide Nasdaq 100 Risk Managed ETF. So it's supposed to uh, manage enough of the risk of when the market goes down compared to a S&P 500, a QQQ index, etc., etc. Uh, let's go into figure out what is the dividend yield of Nusi. The dividend yield of Nusi is 7.95%, which is delicious. And then also, for each stock, it has an annual payout of $1.56, but it also pays monthly. So for individuals who are looking for an affordable income stock compared to like QYLD, XYLD, or IDEVO, Nusi is right around uh, that range of a dividend ETF that's affordable. Costs $19.63 per share. It pays monthly, and then it also pays for each share. It pays 13 cent a quarter. No, I take it back. 13 cent per month per each share that you own. So imagine if you uh, end up like starting out with like 100 shares, you move the decimal to the right two spaces, you'll be making $13 per month if you had $100. If you had 100 shares of Nusi. So I'm going to go through an example. I'm going to go through an example with how to leverage I'm going to go through an example of how to leverage the stock market with right here. So yeah, I'm going to go through the example with you see right here that uh, with Nusi, it pays monthly. You're going to have 15 shares, uh, and right here, let's just go through right here. Um, Nusi only costs $19, and then you're going to be contributing on an annual basis $5,040. It has a dividend yield of 7.95. Has a dividend increase of 2% and a share price appreciation of 2%. So boom, right here and there. So just to calculate it, we're trying to make at least $6,000 on an annualized basis. So by contributing roughly $420, 420 to $430 per month into Nusi. If you wanted to have this fund to make $500 per month, which would be roughly $6,000, it would take roughly 11 years. It would take 11 years just investing just in this one uh, dividend ETF alone. And if you decided to go an additional 4 more years, will be 15. You it would actually be making you $10,000 on an annualized basis monthly. So do as you wish, and that's only if by doing $420, which is you split up, um, which would be $210 per check. Now imagine if you was able to increase to $500 per month, $1,000 per month into Nusi, and then by paying monthly, you can see that you can actually get it up to a point where you can be living off of Nusi. Crazy, right? So just keep in mind that Nusi has a dividend yield of 7.95%. Uh, it pays monthly, and it's supposed to cover when it's like risk averse, cover whenever when it's a down market, so that it is supposed to not fall down as much as the other indexes like the S&P 500 and the QQQ, which derives on share price appreciation. That in a down market is going to fall a lot harder than a NUSI. For the next particular stock, what we're going to talk about to leverage to make $500 per month is going to be a lot different. This is Bank of America, BAC, or as I know, BOA, due to my business account that I opened up with my business, Millennial Investor 1914 LLC. I opened it through BOA, but the stock ticker symbol is the BAC of Bank of America. I know, right? That was a tongue tied, tongue full of full mouth cheek of words of that. Bank of America costs $27.64 a share. As you going to see, is that it's going to take a lot less to. It has a lower yield, so it's going to have it has an annual payoff 88 cents. So it's going to take more shares of Bank of America to hit your goal of $5,000 per month in dividend income or passive income. But so what's the true reason of adding this stock? The true reason of adding the stock is to show you is that unlike the other stocks or ETFs, income ETFs has a set high yield. If you want to live off it right now, you can, but it has no hardly any share price appreciation as much as like a Bank of America stock, and then it has hardly any dividend increase. It would not increase as much as a Bank of America, and then also Bank of America has a long history of just brand loyalty of people knowing what Bank of America is and understanding the brand and having a lot more trust with the community and have a lot more trust with just consumers compared to a JEPI or compared to a QYLDS, etc. And that's just to show you right here. The goal is to make $500 per month which comes out to $6,000 per year. And as you see in the prior example, so in a prior example right here, it took 11 years, 10 to 11 years, at a high yield of about 11 point about so Nusi was 7.8%. So that took roughly 10 to 11 years to hit the goal of $500 per month in passive income through dividend investing. Through Bank of America, it takes a lot longer, but at the same time, once and then also Bank of America pays quarterly compared to Nusi paying monthly, and then also uh, what the advantage of Bank of America is that once you uh, once you start early or you start now and you buy more shares, and you let it compound. The after so many years, it's going to catch up more than a JEPI, a QYLD. Is because the one thing that uh, Bank of America has on the side compared to those stocks is that uh, the more the stock begins to increase its dividend, the yield on cost begins to increase, meaning that the price that you bought it is going to be probably a lot less compared to when individuals buy it in the future. And then on top of the stock having a history of increasing its dividend, and so compared to a JEPI or a Nusi, where you may get the 7.8, the 11% yield at the beginning, but it stays at that. When inflation eats up your purchase, eats up at that particular dividend yield. Uh, Stocks like J.P. Morgan, Bank of America, AbbVie, Mo, when that increases their dividend per year, it helps you to combat inflation compared to just buying a stock just all right out at 10%. And so if you continue to invest into the stock 15, 25, 30 years, your dividend income increases with inflation. Now, Bank of America doesn't have a history of increasing, more than 6%. It increases typically around, I want to say 5.5%, but 5.5% increase, uh, it's not nothing compared to some people stand on their jobs and not receiving a pay increase at all. So receiving a 5.5% increase on an annualized basis is not bad. Uh, so for the next stock or ETF we're going to talk about is JEPI. But the reason why what you see on the screen is JPM, which is JP Morgan Chase stock, the dividend stock. It has a 3.13% dividend yield, and it costs $127.65. And the reason why I'm bringing up this JPM Morgan stock dividend and the stock is because sometimes individuals are a little bit less risk averse into all outright investment into just JEPI. And so also the JP Morgan Chase JPM stock has a history of increasing its dividend, uh, and also has a great history of share price appreciation compared to a JEPI. Uh, but so that's JP Morgan Chase, the stock. So if a person was a little bit apprehensive into investing into just the stock. I mean the JP Morgan Equity Premium Income ETF. They could just buy the JP Morgan stock JPM and be fine. But a lot of times people want income now, want more dividends and more premium income now, and here comes JEPI JEPI. JPI JEPI has a dividend yield of about 11.51%. And so as I'm setting up the table, and you will see that the dividends or the distributions that you receive from JEPI is going to be higher than Nusi, because Nusi was about 7.8%, and it's most definitely going to be a lot higher than Bank of America or BOA, BAC, because it has a high dividend yield right now. But the longer you receive the distribution, 15 20 years down the line, there's a potential that inflation is going to eat into a lot of your returns because your dividend income or your income that you're receiving is not growing. It's just staying at 11%, 10%. And it's good for the present, but horrible for the future because you also want your income to increase at least along the lines equally to inflation, or a lot of times more than inflation. This pays the JEPI pays out monthly, pays out for 45 cents per month for each share that you accumulate. And in my last example, you're starting out with like $250 worth of JEPI for like having 5 shares, and you're going to buy $5,000 worth of JEPI per year, and they put it in the different metrics. And so the goal is to create a of passive income of $500 per month, which comes out to $6,000 per year. And this, since it has a higher yield, you reach your goal in a lot faster time. So this is why a lot of income investors love investing into JEPI because it pays monthly, has a higher yield. It's been pretty consistent, but also what I would say is that past performance does not guarantee future performance. Just know that these videos are for educational purposes only, and also just know that individuals tend to incorporate these different stocks within their portfolio just to mitigate the risk and to increase diversification. When you only invest in only in just one stock, it's I mean it's cool to get those high returns to get that money, but at the same time you just never know what happens. AT&T cut its dividend. Uh, it was another stock just recently had just cut its dividend. Uh, I forgot what company it was, but companies are becoming cutting their dividends. Right now we're at a time of just recessions. McDonald's is laying people off. So just always remember to diversify your funds. If you want to cut back on taxes, and a lot of these distributions, high yield distributions like Nusi and Jepi, put it in your Roth IRA or your traditional or just your traditional IRA. But if you want the income now, you want the money now to live off of, then be my guest. Put it in a taxable account, and then make sure to just pay attention to the uh, the taxes that's going to need to be paid on those distributions of New Seed and also Jepi. But so that's all. That's all. So this is how you leverage the stocks and ETFs in the stock market to make money for yourself, to either pay bills or to live off of in retirement. So you have Nusi, just when people buy it just for us go back here. So you have Nusi again, the nationwide Nasdaq 100 risk managed ETF income, where people try to buy this to manage the risk of the stock market of it going down. Pays monthly. You have Bank of America. Let's scroll back up. It has a stock price of $27.64. Has a dividend yield of around 3.11%. Uh, Pays a lot less on the front end, but pays a lot more money down the line if you have 20, 25, 30 years of a wait time to wait for a particular investment to grow. And then you have the winner, which is Jepi, as always, in most of my videos, the JP Morgan Equity Premium Income ETF that costs $54.30 with a 11.5% dividend yield that pays monthly also. And that's tend to be the bread and butter in the investing community. I used to have this in my dividend portfolio, but I decided to go more so of just annual returns and total return route. So hope you guys enjoy this video of learning how to leverage the stocks to make money in the stock market. I'm glad. Hope you guys learned a lot about Nusi, Bank of America, and uh, J.P. Morgan Chase, the stock, and then also Jepi, due to their dividend yields and why certain investors tend to cling to one or the other. For new investors, write it down, do your own research. Don't take what I say as gospel, but also uh, just remember, always stay consistent in investing, always stay continuously in the market, and I hope you guys have a great day. All right.